Welcome to the Agronomy and Farm Management Podcast. I'm Bruce.
And I'm Josh, and we're your farm management hosts. Let's get started.
Josh, we're into early summer and the weather is really taking a toll sometimes on planting progress. How does it look down in Jackson County?
Jackson, we're a little bit slower on this year. We're starting to run into some issues where we had too much rain. So we've actually gotten a little bit of a window here where we've got producers out making hay. They're actually starting to get the corn and soybeans in the ground. So we're starting to look on the up. But the past couple weeks, it's been a little bit slow just because they can't get anything out in the field. It's too wet. What's it looking like up north?
Well, it seems like we're about a county from each other because what you just described is really similar to what northern Northwest Ohio is dealing with this week and weekend. Had some opportunities to get some things planted. And so the progress is going to go fast. I hand it to our growers. They have a great ability to put a lot of acres in the ground pretty quickly. And as we are middle of May here and kind of creeping into the end of May, I think our optimism is still pretty good to stick to the planting plans of corn, beans, and the wheat crop looks really good. But, it delayed a little bit. Maybe just, I don't want to call it delayed planting because we're just going to call it mid to late May planting instead of the D word, the delayed planting. So far, so good. We've had some alfalfa cut and harvested. We got some alfalfa mills that take some wet hay and some dairy farms that take higher moisture haylage. So there's some first cutting coming off and looking pretty good. So we'll cross our fingers and wish a safe spring progress for our farmers out there. Josh, we have a great guest back with us again today for this podcast. We have Dr. Seungki Lee. Welcome back, Seungki. How are you today?
Thanks for having me first, and it's always very fascinating to be here and having a nice conversation about all about the farm management and also the market outlook.
Tell us, those new viewer listeners, tell us a little bit about your department and what your areas of study are.
I'm an assistant professor in the Department of Agricultural, Environmental and Development Economics, shortly we call AEDE, and I'm ag economist, and I mainly actually study market outlook and market mechanism and how this sometimes price fluctuation and how farmers actually should take actions to a risk management with this sometimes very uncertain market.
Well, Ohio State is fortunate to have you in that department, and we're lucky in extension to get to have you out at our meetings and do podcasts and these kind of things for us. So thank you very much. So WASDE report is something that you study, and just kind of to kick things off, why is it useful to check really specifically this May WASDE report that came out?
Yeah, that's actually a very good question because this is actually a very critical point because we are kind of approaching to the end of the market year and also we are kind of getting closer to the new market year. So of course, farmers are nowadays having a busy day planting corn or soybean on the field and also probably getting closer to the wheat harvest as well. But in the May WASDE report, it is actually USDA's first prediction on the upcoming market year. So the upcoming market year means actually the 2024-25 market year. So now we see the first look of USDA toward the next market perspective.
Dr. Lee, you seem like our go-to guy for OSU Extension whenever we're talking anything about the markets. If you had to summarize it in one sentence, how would you describe the markets?
The May WASDE report, maybe one sentence summary I would say is bullish signal of May WASDE, but we should not be optimist. Probably I'm a little bit pessimistic person, but also at the same time, maybe, I should be the person who is kind of ringing the bell whenever is some potential risks down the road. So maybe that's the one sentence, bullish signal of May WASDE, but we should not be optimists.
Those statements are kind of antagonize him a little bit. So why did you choose that description a bit?
Maybe let me start from corn. So let me talk about what made people feel bullish from the report. Two reasons mainly explain the bullish signal. First, a slightly bigger demand was actually updated in May compared to April. Specifically, 100 million bushels were added to corn demand thanks to higher ethanol and export demand. Second, and more importantly, a smaller production of new crop is predicted. So basically, it's kind of tight supply is kind of pushing up the price to some extent. Talking about the details of corn prospects a little more, assuming that we are not going to have a significant weather issue, the average yield is predicted to be 181 bushels per acre, which largely relies on the trend-based projection. So the number itself is 3.7 bushels per acre higher than what we had last year. The main driver of lower production expectation is actually the lower planted acres. In fact, US farmers planted corn around 4.6 million acres less than last year, according to USDA. So in short, USDA expects that higher corn yield, but dominantly lower planted acres, resulting in a smaller total production of 14.9 billion bushels, which is about 482 million bushels smaller than last year. So that's actually kind of some of the description and make people feel bullish about the market, at least according to the report.
Given that summary, which sounds not that bad, what makes you cautious of being really optimistic then?
Yeah, this smaller production forecast itself is obviously good news for corn fundamentals. So that's why the corn future actually has gone up by 13 cents on the May WASDE day, May 10th. However, the almost 15 billion bushels of new crop corn are still large enough in addition to the considerable carryout from the old crop corn. We already had pretty large corn last market year. So for instance, the beginning stock of corn will likely be above 2 billion bushels in 24-25 market year. This is more than actually 50% larger than what we had in last year or year before. So basically we have extra 662 million bushels from the carryout. This large carryout makes me nervous to jump into any sort of optimism at this moment. For example, the ending stock in the 24-25 market year is forecast to be 2.1 billion bushels, which is still higher than what we had in this market year. So lastly, USDA predicted the season average price for corn as $4.4 per bushel. So overall, I think still corn price is not really shooting up high, but I think it is to some extent surpassed by the large carryout. And still, I think this is bugging us maybe throughout the entire market year, in my perspective.
Dr. Lee, I know that they always say corn is king, but what about on the soybean side? Do we see a similar outlook?
Yeah, thanks for asking that. So actually, I'm not actually prioritizing corn, but usually based on the alphabetical order, I usually talk corn first. So for soybean, obviously, it's very important crop for many Ohioans. USDA has projected an increase in production this year, primarily due to an expansion in planted acreage. So obviously, many US farmers switched corn to soybean this year with an anticipated yield of 52 bushels per acre, which is actually the national average. The total production is forecasted to reach 4.45 billion bushels. This represents a significant increase from last year's production of 4.17 billion bushels, reflecting both favorable growing conditions and strategic planting decisions by farmers. Of course, the underlying consumption of this entire story is we are not going to have very significant weather challenge down the road. Since soybean is departing from stronger fundamentals in the upcoming market year, at least compared to corn, its market outlook is a little different as well. Of course, increased production itself will be pressing the price down, but the domestic soybean crush and export progress is, I think, well supporting the demand, at least at this point, and probably will be a critical factor throughout the market year. And in fact, nowadays, Brazil is struggling with weather issues, which made USDA ratcheted down the Brazilian soybean production by 36.7 million bushels compared to last month. Although USDA expects considerably larger global soybean supply in 24-25 market year, the recent less than expected soybean from Brazil is regarded to soften the soybean export competition when US farmers will get closer to harvest. So we should remember the US new crop soybean is competing with 23-24 market Brazilian soybean in the first 6 months, and then it will be competing with 24-25 Brazilian new crop soybean. In fact, soybean future price reacted to the WASDE report by showing around 10 cents increase when the report was released.
Does that mean we're likely to see some relatively good soybean prices at harvest? What's your 2 cents on that?
First of all, before saying my 2 cents, I'd like to mention that my view is assuming that we are not gonna have any severe weather shocks through harvest point. My 2 cents is given the unfavorable weather in Brazil, soybean fundamentals will be protected to some extent, especially through a little like more vibrant export demand. So soybean market situation will not be that bad in the first half of the 24-25 market year. However, I would also highlight the uncertainty in the second half of the next market year, which will be mainly driven by Brazilian production for the next market year. At the same time, it might be useful to remind the geopolitical factor that can potentially shake the market. Regardless of the outcome of the presidential election in November, the trade tension between US and China will not likely get better, at least in my perspective. So this can another factor that can particularly hit the grain market in the next market year. So probably to me, I'm actually a little bit afraid of next market year because there are too many like factors that can actually shake the market.
Dr. Lee, you've mentioned a lot of good points about what affects the market. Can you go back? Can you elaborate on Brazil and other countries' productions and their situations?
Oh, yeah, sure. I think nowadays the biggest factor relevant to the corn and soybean markets will be obviously Brazil. In fact, many Brazilian farmers are struggling with weather shocks nowadays. As it's their major harvest season, the market is very responsive to the weather events in Brazil. This month in Rio Grande do Sul, the second largest soybean producing state in Brazil, had severe rains, and around 3.7 million acres were reported to get critical damage. At the same time, the west central region in Brazil that are mainly producing second crop corn is also reported to suffer from hot weather. This situation is ongoing and the shock is not fully reflected both in May WASDE report or May CONAB report. Just for your information, the CONAB is the Brazilian version of WASDE, so it's actually a little more like sensitive to any events domestically happened in Brazil. So probably a little more credible. So there is a higher chance that Brazilian corn and soybean production will be further adjusted down. So even like what we saw in the May WASDE report, that's not gonna be the end of the story. Probably we are gonna see a little smaller number at the end in the Brazil corn and soybean production, given this like unfavorable weather events in Brazil. As you also mentioned, like other countries. So like briefly talking about some other countries, Argentina also had some significant rainfall and its soybean harvest progress is a bit behind of their historical average. But at this point, I didn't hear that a significant production drop was caused by it. So it's worth to like checking it regularly, but it's not really like updating the market in that end. And this might not be very directly relevant to corn and soybean, but the Black Sea region and many EU countries are seeing some weather challenges as well. Specifically, frost damage in Black Sea and high moisture in France are concerned as they can reduce wheat production in Europe pretty much. Also, the drought in North African countries is also threatening their wheat production potential as well.
So speaking of wheat, we have about a month left until Ohioans are going to begin to harvest our soft red winter wheat crop. Was there an update in wheat on the WASDE?
Yes, in fact, wheat was picked as the winner of WASDE report by many analysts. Giving you some details, as we look towards the 24-25 market year, global wheat stocks are shrinking, which has been a big factor in recent market rallies. Russia's wheat production is down by 4% due to drought and frost damage. And we've also seen cuts in Ukraine, obviously, and some countries in the European Union. This all points to tighter supplies for global wheat buyers, which has pushed wheat futures up by 20 cents after the release of May WASDE report. As you mentioned that we are approaching the winter wheat harvest, actually the current WASDE report is pretty important because it includes the first USDA forecast for 2024 US winter wheat production based on the National Agricultural Statistical Survey. The USDA's initial outlook for the 2024-25 wheat market is quite optimistic. They are expecting larger supplies, slightly higher domestic demand, increased exports, and a 6% rise in stocks. So overall, it looks like the wheat market is making good progress on several fronts. All wheat production is projected to increase by 3% to 1.86 billion bushels, driven in part by increased yield of 48.9 bushels per acre. Exports are expected to climb by 55 million bushels, reaching 775 million bushels. Ending stocks are forecasted to be 11% higher than last year, totaling 766 billion bushels, making the highest level in 4 years. Although the ending stock is relatively higher than the past, this number itself is still pretty lower than what we had before 2020. So it is not super concerning level of ending stock in my opinion. However, of course, the larger net supply will drive down the price, and the projected season average farm price for wheat is set to decline by $1.1 from the previous market year. So now USDA see the season average price for wheat is $6 per bushel.
Dr. Lee, I want you to get your crystal ball out for a second. Do you see any other game changers that we need to consider when reading the markets through the WASDE report?
Of course, I don't have a crystal ball, but like I would say for the wheat, a wild card that we need to keep track of is the exchange rate. In the 23-24 market, US wheat export was the smallest since 1971-72 market year, which is partly attributable to the strong dollar. Although we see some like silver linings from the lower harvests of other like wheat exporting countries, the strong dollar can be an unexpected obstacle to the wheat export.
What about with corn or soybeans? Will their market prospects be relatively less dependent on the exchange rate?
I would say so. In corn and soybeans, we already actually passed the phase of losing customers when the exchange rate was going up in the past 2 years. So unfortunately, we already lost considerable global customers who are very sensitive to prices. Of course, if we see even higher exchange rates, that is super strong dollars, the currency value will be arising as a concerning factor again in the corn and soybean export. But at this moment, I don't see that is very likely situation. So probably like the exchange rate concern will be mainly about like wheat export progress.
So across corn, soybeans, and wheat, you've given us some really great analysis of the market situation and prospects. What would be some of your takeaways for Ohio farmers, Dr. Lee?
I think for the next 6 months, there will be some good opportunities of sales for both corn and soybean farmers in Ohio. So I would try to lock in some portion of scheduled harvest to the forward contract or other sales contracts. There are two reasons that I'm saying this. First, obviously, the early lock-in contract will be functioning as a risk management. Although the price you lock in may not be the best price throughout the year, but you can at least secure some margin pretty effectively. Second, the current market numbers are largely based on the trend-based projected production level. And I don't see there is a big variable that can potentially increase the number of new crops. So whenever unexpected weather hits either US or other countries, the shock will likely move the price upward. So like by and large, I see maybe there will be some like bullish signals can come to the market like down the road, at least for the next couple of months. So in that sense, probably it's a good idea to lock in when you find some good cash price coming up in your local market. However, I also want to emphasize the 6 months window, because after 6 months from now, we will face another market shaker, the planting and production prospects of Brazilian new crop for the 24-25 market year. And given that, sometimes we actually have experienced very like dramatic export slowdown. So in that case, probably the market will suddenly turn into a very bearish phase. So we have to be always cautious of that timing. So in short, my takeaway is to lock in some sales with good price within 6 months.
Dr. Lee, thank you for being on the podcast again with Bruce and I. Is there any final thoughts that you'd like to leave us with regarding the May USDA WASDE report?
Well, probably I think we actually have a couple of other USDA reports that coming up for the next couple of weeks, especially I think in June next month we are going to have actually official like survey based planted acreage report, and that will be actually pretty much credible like information source to see how much production will be coming up to the corn and soy market for the next market year. And we can actually get a better understanding and better like estimates about the supply and market territory down the road. So probably I understand like this is very busy time for many farmers, but also at the same time, I think it's actually important to collect this kind of information and reflect your marketing strategy. so that you can get paid well given this hard work. I know like all farmers are working very hard, and I want all of them can run the business very successfully. So this information like collection will be, I think, very crucial for their successful grain marketing. And hopefully like many of our audience can like keep track of this market information so that they will not be shocked by whenever market is suddenly like changing their directions.
Thanks for listening today.
For more information about farm management tips, be sure to check out the Farm Office at farmoffice.osu.edu.